Hi, I'm Marcia Davies. Welcome to MBA's annual State of the Association. What a year it's been. You're about to hear from MBA leaders on the hard-fought battles and wins, meaningful initiatives, and opportunities and challenges of the past year and the year ahead. MBA's 2023 fiscal year started on October 1st. And despite market headwinds, your dedication to our industry continues to be extraordinary. In October, more than 4,200 of you attended our annual convention in Nashville. Nearly 500 of you showed up a day early for Empowering You, MBA Summit for Women in Real Estate Finance. I am so grateful for the enthusiasm and unity of the Empower community. We are truly making a difference in celebrating and advancing women. Your energy extends to all of our conferences, education courses, committees, advocacy, and all of the other ways we work together throughout the year. As we begin 2023 with an exciting lineup of conferences, I want to name a few. Our Independent Mortgage Bankers Conference on Coronado Island this January. Our Commercial Real Estate Finance Convention is in San Diego in February, and Orlando is hosting our Servicing Solutions Conference later in the month. Our annual Tech Conference in April is at the Center of Technology and Innovation, our very first time in San Jose, California. That conference is followed by the National Advocacy Conference right here in DC, and rounding out our spring, we will be in the Windy City, Chicago, for our Commercial Multifamily Servicing and Tech Conference, and once again in the heart of New York City for the Secondary and Capital Markets Conference. We hope to see you soon. Now it is my pleasure to introduce MBA President and CEO Bob Broeksmit. Take it away, Bob.
Thanks, Marcia. The last 4 years as president and CEO have flown by. I know they have for you, too. Think about what we as an industry have gone through. The COVID-19 pandemic, the advocacy behind minimizing and ultimately eliminating FHFA's adverse market refinance fee, the staffing and operational challenges of remote work, all during unprecedented borrower demand and a refi boom. And who can forget the numerous laws, regulations, and tax proposals always rearing their ugly head, threatening to raise costs on your business. Now, to be fair, there's been a lot of good. 2 record years of over $4 trillion in total mortgage originations. In Washington, our successful mission to keep harmful tax hikes out of the Build Back Better Act debate and the so-called Inflation Reduction Act. And after years of going in the wrong direction, I was heartened to see the new U.S. Census Bureau data that show homeownership rates for Black and Hispanic households are finally on the rise. While we can't take all the credit, I firmly believe your support of MBA's Building Generational Wealth Through Homeownership initiative, the Home for All pledge, and our Convergence initiative are paying dividends. There's a lot more work to do on this front, but together we can continue to make sustainable homeownership possible for consumers of all backgrounds. Unfortunately, the mortgage market environment today is stormy. Borrower demand has plummeted due to higher rates, inflationary pressures, and rising economic uncertainty. It's the same story for both our single-family and commercial multifamily members. Times are tough, but our industry is resilient. We at MBA are so appreciative of the support we have from you. We ended fiscal year 2022 with more than 2,200 members and remain ahead of our pace for total member count in fiscal year 23, as well as ahead of the 4-year average for dues revenue. We do, however, recognize that the current market environment is leading to closings, consolidation, or decisions by some companies to cut expenses. This impacts us as well. If you haven't already, please do consider renewing your MBA membership. Despite inflation, we have once again refrained from increasing membership dues. At the same time, we are adding more benefits for you and your employees. Today, MBA provides more value for your membership dollar than ever before. In just a moment, my colleagues will show you some examples. But here are a few that stand out to me. They highlight the power we have here in Washington. MORPAC is now one of the 10 largest trade association PACs in DC. In 2021 and 22, we raised a record amount of around $3 million for the midterm elections and our ongoing efforts. Membership of our grassroots lobbying group, the Mortgage Action Alliance, has tripled to 63,000 industry professionals in the past 2 years. Across America, our advocacy at the state and local levels is getting results. For example, 42 states have now passed legislation to permit remote online notarizations. 21 states and the District of Columbia have enacted legislation, promulgated rules, or issued regulatory guidance that permanently allows mortgage loan officers to work from a remote location. And we have scored victories recently against harmful proposals in California on CRA expansion and a new foreclosure system. On the technology and innovation front, MISMO is delivering for you every day by creating new standards that instill uniformity, better clarity, and improved efficiency. These help you save time and make more money. I want you to know that you and your company have the support of MBA. Our talented staff works daily to help improve your business outcomes. Thank you for placing your trust and investment in MBA.
Bob, thank you for those insightful remarks. We are just getting started and have an exciting program for you. MBA's Vice President of Communications, Adam DeSanctis, is sitting down with MBA leaders to discuss 2022 wins, initiatives, and challenges, and what you need to know in 2023. Let's kick it off with a topic everybody wants to know. What will happen with interest rates in the coming year, and how will that impact our single-family and commercial multifamily members? Adam, who's in the hot seat first?
Thank you, Marcia. I'm now here with MBA's Chief Economist, Mike Fratantoni. Mike, it's great to talk to you.
Thanks, Adam.
So this year we've really seen a huge jump in mortgage rates. It's sapped demand. Mortgage volume for the year now expected to be half of what it was the last 2 years, which were record years. What are you expecting for mortgage markets in 2023?
Yeah, well, it really has been a wild ride in 2022. A couple of things we're expecting for 2023 that I would highlight. One, we think there's going to be a recession in the U.S. and really globally, particularly in the first half of 2023. And that's going to move the unemployment rate from the 3.7% where it is today to as high as 5.5% by the end of 2023. That really is a result of the Fed pushing up short-term rates extraordinarily quickly this year, and really the effects of that we think are going to be felt through the course of 2023. They are going to be successful in their goal in bringing inflation down from 7 to 8% to back closer to their 2% target by the time we get into 2024. The impact of all of that move, though, is we think we're past the peak now for mortgage rates, which I think for a lot of our members, that's really great news to hear, that we know we've gone from 3% at the beginning of 2022 as high as 7.5%. Things have come back a bit over the past month. We think we'll be 5.2% by the end of 2023. That's going to really help both on the affordability side for home buyers and may even bring a little bit of refinance volume in, particularly for cash out borrowers.
Yeah, that's definitely good news. Now let's switch over to the commercial real estate markets. Same type of thing impacting them. We have higher interest rates, increased economic uncertainty have slowed commercial real estate markets this year. What are you anticipating there?
Yeah, well, in 2022, commercial markets didn't slow as quickly as the residential markets did, but boy, have they slowed down now. And we're really seeing a huge bid-ask spread where, you still have owners really unwilling to sell into these weaker markets and buyers waiting for property values to come down. We think commercial property values are going to come down pretty substantially, and you see that in higher cap rates, which have followed interest rates up. Within the commercial market, it is always important to look at different property types. The multifamily portion of the market continued to be really one of the strongest property types out there. On the demand side, some of those buyers, potential home buyers who've had sticker shock in the past year, are likely to keep renting. So that'll continue to increase demand for apartments. But on the supply side, multifamily construction has been very strong. There are now more multifamily units under construction than at any time since the 1970s. So the combination of those two, we think rent growth is going to slow quite a bit next year. And again, that's another headwind for the apartment market. Really one of the most challenging property types, though, we've talked about this before, Adam, is what's happening in the office sector. And Jamie Woodwell and I put out a paper really trying to dive into this office market and see what's going on. We're still in a place where occupancy in a typical day in U.S. offices is less than 50%. So really a strong headwind for that office market. Couple that with the rise in rates. You have, a fundamental issue in terms of that lower occupancy, and then a property value issue as cap rates go up. So one of the bigger concerns we have is some of these office properties coming due over the next couple of years in terms of a loan maturing. They might have some difficulty financing. The positive is that, commercial property values have gone up so much in the past couple of years that owners have a lot of equity. So that's going to give them some flexibility even in this challenging environment. So wrapping up, Adam, it is going to be a tough year for both our commercial and our residential members, but I do think long-term rates, mortgage rates, likely to be lower at the end of the year than where we are today, and that's going to be able to provide a little bit of relief as we get through the course of 2023.
A forecast that calls for lower rates is certainly music to the ears of both members and borrowers. Now let's pivot from the market to Capitol Hill. Watch as Adam gets the scoop on the many advocacy accomplishments, upcoming battles, and legislative opportunities in the year ahead.
Joining us now is Bill Killmer, our chief lobbyist. Bill, thank you for being here.
You bet. Happy to be here, Adam.
So it was a busy year on Capitol Hill. Looking at our victories over the past year, I like to put them in two buckets. We have one, bills that we supported that passed, as well as proposals, many of them on the tax front, that would have been detrimental to our members that never saw the light of day thanks to our efforts. Can you recap the year for us?
Yeah, a really interesting time, this Congress, as it winds down. Historically narrow margins for the Democrats as a party controlling both the House and the Senate and the White House. So we were playing defense on the tax front quite a bit, Adam, but we're able to preserve the 1031 like-kind exchange tax treatment, no increase in capital gains, no increase in capital gains on the gain of the sale of a home, no changes to business interest deductibility. And on the small business side, for our members that are formed as S-Corps or LLCs, no changes to the 199A small business pass-through deduction against qualified business income. And there were other attempts to try to expand liability for pass-through entities that also, were forestalled. Also, some really good defense on the False Claims Act front, efforts to try to inadvertently weaken some of the progress that was made over the last several years between HUD and DOJ and on lender liability issues, and we've been able to keep that bottled up in the Senate as well. Offense, on taxes, I feel really good about the fact that we took the long view and preserved the deferred tax treatment for mortgage servicing income by getting an exception to what became the Inflation Reduction Act in the context of a new minimum book tax that became the chief revenue raiser as part of that effort. So feel really good about that. We were able to advance remote online notarization in the House, still working on that in the Senate, and advanced some reforms to the appraisal process for the VA home loan program through the House overwhelmingly, and hoping to get that done in the last few days in the Senate as well.
Yeah, Bill, that was a great summary. I'm looking back, it was certainly a busy year. Let's turn to the 118th Congress, the midterm election outcome. We, set in stone. The Democrats have a slight majority in the Senate. They maintained that. On the House, the Republicans have the majority, but again, very slim. Do you anticipate any sort of, major legislation next year and anything that could impact our members?
Yeah, it'll be a different kind of gridlock. I mean, I actually think our members will probably be best served by educating, policymakers and folks on the Hill about the state of the mortgage market and how their customers are being impacted. So there will be some opportunities, but it'll be a different kind of gridlock. No big tax effort because Republicans and Democrats won't be coming to an agreement on revenue raisers, and we won't be playing defense in that regard. The House majority will take a kind of more of a reactive stance on housing, but a lot of vigorous oversight of the housing regulators. That's the one thing we knew for the midterms. We're going to have 2 more years of the Biden administration and regulatory treatment in that regard. The Senate's going to work, on affordable housing, renter protections, curbing private equity investment in single-family rental and things of that sort. But opportunities for us, particularly with respect to oversight of the CFPB and reacting to what Congress may need to do in the wake of the decision in the Fifth Circuit that impacts the funding and constitutionality potentially of the CFPB.
Yeah, to use a football term, to win the Super Bowl, you have to play good offense and defense. And I know we'll be doing both again next year.
Yeah, and I think there'll be some targeted opportunities, and we're really going to need the engagement of our members as we fight the battle for them here in DC.
Every week, even when Congress is in recess, is a busy one for our legislative and political affairs team. And during an election year, forget about it. What a year. Next up, you're going to hear from Senior Vice President Mike Flood for a rundown on the commercial multifamily side of the business.
Mike, we just heard from Bill Killmer about some of the top wins over the past year. Many of those harmful tax proposals that he mentioned would have directly impacted our commercial multifamily members. But what were some of our other victories over the past year and the core focuses right now?
Thanks, Adam. You're right. Being an MBA, we really represent all of commercial real estate as well as residential. So when I think about that, it's not just at the federal level, it's at the state level. And I think we had a lot of good wins on the affordable housing front when we think about inroads with creating tax credits to allow for the refurbishment of buildings. So think about California. And then when I think at the federal level, one of the big wins we had is the HUD used to have a 9-month pipeline just to get a loan assigned to it, and that's one of the greatest producers of affordable housing. That's now down to 0. Hey, thanks to interest rates, but also to our advocacy with our friends in garnering consultants to help them loosen the load. So we think we're starting to make progress in building more affordable housing.
Your team is certainly focused on boosting affordable rental housing supply and working with the administration and others on that front. Now let's turn to the regulatory side. What are some of the top issues that you'll be focusing on in the year ahead?
You know, you hit that perfectly. With a split Congress and a president in the second half of his term, they focus their energy on the regulators where they can accomplish the most, regardless of party. So when I think about commercial real estate, I like to go by type of finance. If I'm a bank, I'm concerned about the Community Reinvestment Act, not the act itself, but how much credit I'm going to get for multifamily housing investments. If I'm non-banks, I'm still concerned about taxation. As states roll out of COVID, they're looking to get their budgets back in order, and they're looking for more taxes, and non-banks seem to be an area of focus. When I think about life co's, here we're on offense. Last year we helped lower permanently some of the risk-based capital standards. There's one portion remaining on CM6 and CM7 that we hope to help them with, and that should get accomplished in the first quarter. And then when I think about all of our lenders in total, the two biggest things that come to mind are, as you say, affordable rental housing. Here we're looking to increase the stat limits at HUD legislatively, but at the same time increase large loan limits and create more programs through the GSEs and for the private sector. For private companies, we're looking to create tax credits at the state level to help refurbish those offices and hotels into affordable housing. And then all together, we have to be concerned about climate change. The SEC is looking at it from the sense of disclosures and how we lend. And the bank regulators are looking at it for how we protect ourselves when, say, a major flood happens. So we all have to work together to figure out how we're going to rationalize making sure we protect the environment, but also making sure lending continues to occur.
Mike, I think you summed that up perfectly, and it will be a busy year.
It certainly will, and with the help of our members, we'll see it through.
Mike and his team certainly have their hands full. The same can be said for the single-family side of the business. So now let's take a look.
Thanks, Marcia. I'm now here with MBA's Pete Mills, who leads our regulatory policy team. Pete, it's great to talk to you.
Thanks for having me over, Adam. I appreciate it.
So I'm not going to have you recite all of our meetings and letters with the regulators and agencies over the past year. So just very high level, what were some of the top highlights and achievements for you and the team over the past year?
Yeah, so last year we ended the year with the release of our Building Generational Wealth initiative, policy initiative. And so we really began this year executing to that. So really at the beginning of the year, we were able to secure a really important legal clarification from HUD that a special purpose credit program that is compliant with the Equal Credit Opportunity Act is also compliant with the Fair Housing Act. And that led to a whole series of events over the course of the year that really moved the ball forward in that space. After that letter came out, the banking agencies reinforced it. The GSEs built their equitable housing finance programs with the SPCPs at the center of their programs. We put out a toolkit to help our members introduce their own programs, and really has been a tremendous explosion of interest really in getting into this space. That was a really significant win for the year, really on one of our signature initiatives. So that was a really great outcome. We had a number of wins in the states. We have gotten to 42 states now that have adopted a remote online notary bill that conforms with the MBA model bill. We got more than 20 states to adopt remote work, permanent remote work opportunities for loan officers and others engaging in licensed activity. So it really was a great year, in addition to all the comment letters and whatnot that you mentioned.
I think it's very important to see that our efforts are paying off both at the federal and state level. What are the top areas of focus for you and the team next year?
So still a lot of work in progress on building generational wealth. We're working with FHFA to try to get them to increase the area median income limits on Home Ready and Home Possible programs to make those more available to more folks. We're continuing our longstanding work on IMB capital and liquidity standards. We were able to get mostly aligned standards from FHFA, Ginnie Mae, and the Conference of State Bank Supervisors last year. Still more work to be done there to make sure that those standards are workable and viable for independent mortgage bankers. Working with the banking agencies to try to get them to work with us to bring banks back into the mortgage space, particularly into government lending, so that'll be a focus in the year ahead. And then I think some significant reform work that we want to do with Ginnie Mae to try to make that program more viable for participants, both banks and non-banks alike, to make sure that we have deep liquid markets for the Ginnie Mae security as well as the Ginnie Mae mortgage servicing rights. So a lot of work ahead, and we'll be looking forward to a great year.
And focusing on banks and IMBs all around is very important.
Look, every business model counts in this business. It's one of the strengths of our housing finance system that we have independent mortgage bankers, REITs, bankers, and we got to make sure that they're all fully engaged and participating in the marketplace.
Fully engaged. Thanks for the great segue, Pete. We're now going to hear from Tamara King, our Vice President of Strategic Industry Engagement.
Tamara, thanks for being here. So we just heard about some of the top regulatory and policy initiatives and wins from this past year, as well as what to expect next year. Why is it important that our members lend their experience and voice to help us on our issues?
Well, Adam, thank you for that question. Really, the reason why we're so successful here at MBA with our advocacy efforts is because of the members' engagement. We really work with our members to make sure that we understand the consumer impact as well as the industry impact of policies, and that helps make our comment letters and our advocacy efforts really strong and very powerful. Actually, it's why policymakers in DC come to MBA for their expertise on the impact of policies, and we're often quoted from our comment letters when they're discussing policies.
Yeah, a lot of comment letters, those are also quoted in the media and really kind of shape the conversation in DC and beyond. So we hear often from members, what can they do? How can they get more involved?
Well, there are two really easy ways to do that. One way is to join a committee. And we have committees that range from a variety of issues. And that's really how we develop our policy positions here at MBA. And so we can discuss loan administration issues, production issues, tax and accounting, legal issues, a variety of issues. And that's how we get our information there. Another way of doing that is to join a networking group. And one of our networking groups really are our members coming together based on their business model or business channel to discuss common business concerns from their perspective. Because everybody may have a similar issue that they're concerned about, but depending on where they sit in the industry, it impacts them differently. So it's important for us to understand those differences, and it's also an opportunity for members to have peer-to-peer learning opportunities. So that's a great way of getting involved. The one thing I always like to say about member engagement is that it sounds like it's a lot of work, and we know that everybody is really busy. So what I always encourage people to do is to sign up and to just get involved and get the information, and they can choose how involved they want to be. You can be really involved if there's an issue you care about, or you can go into learning mode and not be as involved. You can really customize it for yourself. I always just suggest get involved.
Yeah, that's a very good point. There's always a lot of work to do, but at the same time, you have the dedicated MBA staff and the support of our members.
Correct.
Tamara, as always, very well said. Another area where we need full support of our members is affordable housing. Let's go back to Adam.
Steve, thanks for being here.
Adam, thanks for having me.
So Steve O'Connor leads our affordable housing initiatives here at MBA, all the meaningful work we're doing in communities across America. Steve, promoting minority homeownership is a big core focus for us. What are some of the highlights from you and the team over the past year?
Sure. So addressing the racial homeownership gap is a longstanding priority for MBA. We have a holistic approach. We've got a policy approach through our Building Generational Wealth through Homeownership Initiative, robust set of policy recommendations. That task force was led by Susan Stewart when she was chair in 2021. And then we've got a set of pillars under the Home for All pledge that Christy Furco led last year as chair. And as part of that Home for All pledge, we have Convergence, a place-based cross-sector collective impact initiative that involves partners from the public sector, the private sector, and the nonprofit sector. And we launched our first one in Memphis in March of 2020, and our second one in Columbus in July of 2021. These are multi-year initiatives. In Memphis, the latest HMDA numbers show that we're actually making a significant impact, particularly in the communities where we're focused. And in Memphis, we stood up an independent 501c3. It's fully funded. It has a full-time executive director, an independent board. And in Columbus, we recently transitioned to allow an existing local 501c3 to be the day-to-day manager. So this model, basically what it does, Adam, is MBA is the convener and catalyst with the local and national partners. We are the catalyst, we help launch it, and then it becomes self-sustaining with leadership from the local community. And what we hope to do over time is test and learn new approaches in these markets and create best practices and templates to our members across the country so they can try to reach more minority consumers.
And I think that's terrific too, to see some of that data playing out in these
Yes.
communities and showing that our efforts are actually proving its worth so far. Now let's turn to affordable rental housing specifically. What's in store next year?
Yeah, so Matt Rocco, our current chairman, has an affordable rental housing strategy as a key area of focus. And this is going to involve a lot of MBA departments and really has 4 pillars: working to increase the supply of affordable rental housing, promoting as a leader renter counseling, which is good for renters, good for landlords, and ultimately good for lenders, trying to create a more diverse multi-family lender workforce to better mirror the markets we're trying to serve. And then last but not least is harmonizing and streamlining the different definitions around rental in the affordable context. And Adam, before I finish on Convergence, I should add we're really excited that we're going to be launching Convergence Philadelphia, our 3rd market, in March of 2023. So we're really excited about all the work we're doing in this space.
Yeah, that's very exciting. And of course, our annual next year is also in Philadelphia. So a lot to come from there and elsewhere. Steve, it's so great to have you on and see the difference that we're making in communities across the country.
Adam, thank you.
Steve and the team are doing incredible work bringing stakeholders together to address the affordable housing supply shortages in too many parts of our country. Let's jump back to Adam again for another key priority at MBA, advancing diversity, equity, and inclusion.
Thanks, Marcia. And joining us for our last interview of the State of the Association is Lisa Haynes, head of our DEI programming and our CFO. Lisa, it's so great to have you.
It's great to be here, Adam.
MBA is really leading the industry right now in promoting and advancing diversity, equity, and inclusion. What were some of the highlights over the past year?
Well, it's been a very exciting year. We've actually done a lot. So we issued a DEI playbook in September of this year, free to all members. And so it gives really guidelines and outlines for how they can establish a DEI program, take it to the next level. It's for both our commercial and our residential. We've also been running an industry mentoring program all year. And this program has turned out to be great. We have about 275 mentors and mentees engaged in the program across both industries, both the commercial and the residential industry, where you can choose your mentor. You can also be a mentor and a mentee at the same time. So you choose your mentor, you go about 3 or 4 cycles. You get to change mentors or mentees depending on what the issue is that you want to discuss. So it's been a really good year. And finally, I think one of the most exciting things is we got to engage a lot with students in college. That's a potential future for our industry. And so we're able to go to several events where we engage with college students to teach them about our industry, get them really excited about being a part of potentially a great industry. And so we're hoping to do a lot more of that.
Yeah, I think education, mentorship, and really engaging with those students while they're entering their career and hopefully coming into our industry. I think that's very important. What's in store for 2023?
Well, a lot's in store for 2023 in the planning process now. One of them is to take that industry mentoring program and actually pilot it with students. And so we are working with a couple of members now to pilot that with 30 students and 30 mentors in the industry to really do more than just a one-touch point with students, but to really engage them in what happens with our industry, but also provide them mentoring from our perspective, from leadership perspective, on what they can do in their own careers moving forward. We'll hope to continue the mentoring program for our industry as well, but we've got some other things planned, and we want everyone to stay tuned and be aware. We've got a lot going on. We just want to continue to provide value to our members because that's what we're all here. That's the essence of why MBA exists.
You have just seen and heard the ways that MBA delivered for you in 2022 and what the primary focuses will be in 2023. But let's face it, if these last few years have taught us anything, it is that priorities can and do change. That is why our work to support you is never complete. We are always prepared for the unexpected. You can count on us to keep you current on research, industry developments, and our efforts to influence legislation and regulation to ensure your business can operate at its full potential. I am confident that by working together, we'll get through these tough times stronger and better than ever. Thank you for your membership and your continued support.